Thank you everyone for being here. My name is Olta Andoni. I'm Deputy GC of Avalanche. I'm very happy to be moderating this all-star women panel. We're going to talk about new forms of government money, and I'm going to have our panelists introduce themselves. There is a lot to discuss. It's a very broad topic. I hope we're going to be able to cover everything within 25 to 30 minutes.
Hi, I'm Rebecca Rettig. I'm the General Counsel of the Ave companies, and I'm also on the Board of Directors of Silvergate Bank.
Hi, I'm Jannah Patchay. I'm here today representing the Digital Pound Foundation, for which I'm a member of the originating team and the policy lead. And I also run a consultancy called Markets Evolution that specializes in market structure and regulatory strategy.
We are supposed to have Teana Baker online. Is she online yet? No? Okay. So hopefully she's going to join us soon. She's another participant of this panel. But without further ado, so for those of you who probably are new to CBDCs, just a little bit of introduction or a short summary. CBDCs are just a form of digital, or a digital form of countries' fiat currency. And they are launched, let's say, instead of central banks launching or printing fiat money, they launched these digital tokens that are backed by the government, by full faith and credit by the government. So, of course, there are so many issues, especially when it comes to the design of CBDCs. But at the same time, we're being faced with two forms of government money, stablecoins and CBDCs. And from a perspective of financial stable regulatory markets as well, we are facing a lot of regulatory issues as well. And there's some debates right now whether or not US should support the US digital dollar, or should we wait for the technology to be ready to support the US digital dollar. So what is the future of two forms of government money, ladies?
So I think I think Teana has joined us.
Hey, Teana.
Hi, Teana. So I think, as we've seen recently, there are countries that are very prepared to launch a CBDC like China, and then there are countries that are still in investigatory stages like the United States, the UK, and other countries in the EU. And regardless of one's thoughts about whether having it be government-backed or having these private stablecoins that have emerged and really have a first-mover advantage from a technological perspective, and also just from a being out there and being used so ubiquitously, I think we can see that in DeFi, stablecoins are a critical part of the infrastructure. It's coming, whether you like it or not. And I've worked with the Federal Reserve Bank in the United States about what a good form of CBDC should look like and how you address the primary issue of digital identity and ensuring that you have continued privacy as you move forward in thinking about it.
So I think the first thing to say is that central bank digital currencies aren't the only form of fiat digital money. We've also got stable coins on the other end of the spectrum, or at least fiat-backed stable coins. And so there's this spectrum of fiat-backed digital currency ranging from the private end, which is your stable coins, through to the public end, which is central bank digital currency. And if we look at where CBDCs came from, or where the interest in them came from, I think prior to June 2019, some banks were looking into them. So the Bank of England, for example, was an early leader in looking into that space. But it was really June 2019, Facebook's announcement of Libra, that really spurred all of the central banks into action. Because now this was no longer hypothetical, but the private sector, and not just any actor in the private sector, but a company that had access to 2.3 billion users at the time, was talking about launching its own form of digital currency. And that immediately posed a number of concerns to central banks and regulators, not least of which was their ability to retain control over their own monetary sovereignty. At which point Tina's going to smile because she's like, you're not going to talk about monetary policy at the end of the day, are you? We'll try to make it fun. So that was what really galvanized action from central banks and really spurred them on to start looking at it. And since then, we've seen various stages of development, leaps and bounds all over the place, different motivations also for different central banks to look at CBDCs depending on the unique characteristics of their own jurisdictions. But ultimately, there's probably going to be an ecosystem out there of both private and public forms of fiat digital currency in the future. And the question is, how will that interoperate and how will they coexist, I think?
Absolutely. Teana?
Yeah, I think that the discussion around, public and private money is, one that we've been having, and essentially we have that already today. And I think there is a lot of discussion around CBDCs versus stablecoins, and I don't necessarily see them to be mutually exclusive. It doesn't have to be a binary choice. I think they serve different purposes. But the central bank today isn't really well placed to provide retail products, in my perspective. And so, I'd also argue that it's not their job to. And so when we're looking at CBDCs, I think there is the question around a retail CBDC versus a wholesale CBDC, and they do very different things. I personally see a lot of value in a wholesale CBDC, but from a retail perspective, I still kind of struggle to identify what the problem we're trying to solve here is that isn't already solved by potentially, stablecoin payment systems as they exist today. And then that design piece that we were talking about earlier, I think is really critical for me. So if we're trying to design the future of money so that it is interoperable within a Web3 environment, and I mean a web that is designed to transfer value, not just communication. If those CBDCs aren't being designed with DLT or blockchain technology, I struggle to see how they're going to interoperate with that Web3 environment, which basically kind of puts us where we are today with digital fiat.
And I think this is a perfect segue for many of you here. Maybe you learned that, or there was the president executive order on March 9th, and there were so many positive, like a positive perspective delivered from the order. But I think that Section 1 especially was delivered on a very high note when they talk about the sovereign money and how important sovereign money is about building a well-structured financial system. Do we think that is sort of a green light or red light for CBDCs, or not yet?
I don't know if I think it really changes what the stablecoin report that came out earlier this year in the United States really said, which is like, we're just going to explore it and we'll write some reports. But to a couple of pieces of Tina's points that she made, the reason I think that a lot of central banks, including in the United States, want a CBDC is because they want to continue having hegemony through state-backed currency. And so they see that crypto is here, it's here to stay, and so they're trying to remain relevant, particularly after there was all this upcry about the Libra/Diem announcement and building out. And honestly, I don't think, Tina, they want it to be compatible with Web3. I think they want it to be on a private blockchain that can't be used. And I will say, when I've spoken to a lot of different central banks, they ask about bridges, how they work, how to eliminate bridges and things like that, because they are worried about having it be bridged in. I think the other problem with seeing a CBDC be built out is, especially just to go back to your point about retail users, is just like we had to have a transition into people being able to take credit card payments at your local grocery store, we will have to build out the infrastructure, including through a private blockchain, to allow grocery store operators, and we're not even talking, like large chains, but little small operators on Main Street in the small town that I live in, to be able to take a CBDC and make it worthwhile and have a bank account that's compatible with it as well.
Absolutely. Jannah, I'm sure you can bring some more perspective on this.
Yeah, so I think the executive order was interesting in that it didn't specify whether it was focusing on the wholesale side or the retail side. And as Tina's pointed out, there are very different drivers for the introduction of CBDC or for the use of privately issued stablecoins on either side of that divide as well. So on the wholesale side, for example, while in in some jurisdictions there's more of a potential interest and a push from financial institutions in the introduction of wholesale CBDC in order to improve cross-border settlements or settlements of digital assets, and so incentivizing the adoption of digital asset markets, for example. In others, there perhaps isn't that same interest. So I think, was it last year or the year before, the American Bankers Association wrote what can only be described as a passionate letter to the Fed, with listing all its arguments against the introduction of wholesale CBDC. On the retail side, on the other hand, the question is, it's very different. Why do you want ordinary consumers to have access to central bank digital money? And the answers there are sometimes a bit more philosophical. So, for example, most people aren't really fully aware that the money they use now has transitioned in its nature over the last 20 to 30 years. So 20 to 30 years ago, most of the time your day-to-day transactions would have been in cash, which is central bank money or public money. Whereas now, they're actually all in commercial bank money, which is privately issued money. And so from a central bank's perspective, there's quite often an interest in to what extent do we want the general public to continue to be able to access central bank money, and to what extent do we want to support digital cash in the future, or to support innovation in general.
And I agree with you. The other question is that do we have room for both this form of payments? I think that every single research, they try to value the, what stablecoins can bring and CBDCs can offer for the financial systems, but do we have room for both?
Yeah, we're going to have to keep it. So first of all, stable coins are out there. So the question is how long, how will they remain out there? Everybody's talking about regulation. So that's going to have to come down in some way, shape, or form. And we're not going to have operable CBDCs for, at least not in the United States, for quite a while. So I think that they are going to have to coexist, because they're going to put something in place that allows today's stable coins to continue and to continue to have their place in Web3 and the like, and then they will have a separate form of CBDC if everyone can get it together. But on the flip side, I'm not quite sure if the Fed is really going to do it. I don't think, notwithstanding the commitment through the EO and through their report, they see that there are large-scale issues that need to be resolved, particularly with respect to digital identity.
Absolutely. Jannah?
I do believe that there's room for both to coexist, and I think that they should coexist. I think that there is a strong case to be made for future both wholesale and retail CBDCs. From a wholesale perspective, institutions like to settle in a form of money that has the least counterparty risk possible, and that's central bank money. From a retail perspective, it's again about that monetary policy angle and continued public access to public money. But I think that they can also fill different use cases. So there's a whole plethora of use cases out there, and a central bank digital currency might not solve for all of them, or it might not be programmable. And so privately issued stablecoins can be designed in different ways that can support different use cases.
Teana?
Yeah, I completely agree that there are different use cases and there's room for both. As Rebecca said, the regulatory treatment of stablecoins is currently kind of front and center across multiple jurisdictions. And their use case is really expanding and really solidifying as a payments instrument. And so, if we're looking at the regulatory treatment of those through that lens, stablecoins should really be kind of, looked at and regulated in the same way that any other retail-focused digital payment system operates, with the same activity, same risk, same regulation. From the U.S. government perspective, we've seen the President's Working Group report on stablecoins, and their risks that they've identified, such as run risk and payment risk, and I think most importantly, the risk associated with the concentration of economic power, going back to what Rebecca said around keeping public and private money separate. I think is one of the key concerns. But for me, I still don't necessarily, I haven't come across a use case that a retail CBDC would solve in kind of Western markets that a retail CBDC, that a stablecoin wouldn't be able to solve for today. And so, you know, I hate to be a skeptic, but it to me feels like, you know, a solution looking for a problem on the retail side. Wholesale side, I completely get it. And then going back to, you know, me as an individual, when I transact with cash today, you know, that is pretty private, right? I can make a peer-to-peer transaction with cash, and, you know, if nobody's looking at us and we're not, you know, under any, you know, surveillance cameras, that's a private transaction. I don't have the same confidence with some of the CBDC, the retail CBDC designs that I've seen. And so that surveillance and privacy element makes me very nervous.
Absolutely. And another topic that I think is going to be interesting for our panel is that we're dealing with this unbundling of separate money powers, so to speak, and how is the international monetary system is going to deal with this sort of disruption, because this is real disruption. And we're talking not only from a regulatory perspective, but what else, what do you foresee?
You want to start? Monetary policy.
Well, I think it is very interesting from a geopolitical perspective. China's introduction of the digital yuan has been so far incredibly successful. It's near live at the moment. I think it is being used by live users. And while China does have a certain coercive ability that other jurisdictions perhaps don't have when it comes to adoption, it is also incredibly well designed. If you go on YouTube and look up demos of the digital yuan wallets and how interoperable they are with existing payment systems, as well as, you know, different on-ramps and off-ramps, it's actually pretty amazing to see the capabilities there. And while China hasn't said, in fact, I think it's explicitly said that it's not intending to undermine the US dollar's status as the world's reserve currency. If it wanted to, you know, it could potentially say to all suppliers in its Belt and Road Initiative, you've got to pay us in our CBDC now, and that would just happen. So there's all sorts of geopolitical, interesting nuances that could happen. Whether they will or will not is a different question, though.
Yeah, I do think for those of us who are speaking behind the scenes with regulators and policymakers in the U.S., China's introduction of a CBDC and just the shifting of where China is in the world from a monetary perspective, and the U.S. has deprecated a lot of its banking relationships around the world in developing countries, and then China comes right in. I think the China CBDC is one of the things motivating the U.S. On a positive note, because I think a lot of us have, I think that there hasn't been as much positivity on CBDCs on this panel, but one of the things that I do think could be productive is that there could be better and quicker and more efficient exchange rates when you're going from place to place if there is a CBDC system in place. And the other thing that I think could be beneficial on the CBDC side of things from not even just a monetary policy is the efficiency. I know we all scan our credit card and it feels fast, but sometimes it doesn't work, and sometimes you have to scan it twice, and I'll say my credit card doesn't work here with the scanners that are compatible, and so I do think that there could be some beneficial points to having wallets on your phone and things like that that will allow you to pay in a way that we don't have today.
Absolutely. Teana?
Yeah, I agree that there could be some efficiencies. I guess I'll come back to, would you not be able to do that same, retail payment through, a digital wallet with USDC, for example? I don't know. So again, I kind of still think that you can still solve that problem with, private issued money, and the quality of that and the oversight of that, is one of the things that we're talking about, from a regulatory perspective, to ensure that customers have confidence to use it in that way. I do think that the incredibly positive element about China's CBDC is that it has really inspired policymakers around the world to kind of wake up. and to take digital assets and their digital asset strategy much more seriously, I think, and proactively than perhaps they had been. There's been a number of bills that have been passed, or not passed, proposed, excuse me, in Congress over the last couple of months, specifically focused on understanding how China is using their CBDC, being able to track the information that they have, how American businesses may be exposed and or contribute to information sharing with China. And so I think that some of these things that arise as a catalyst can end up influencing broader policy across the digital asset space that will be beneficial. And hopefully the executive order that we saw come out of the Biden administration last week is an example of governments understanding that this absolutely isn't going away, and a whole of government approach and strategy to address the market holistically is important.
Do you mind, Olta, if I just...
Sure.
I want to respond to the point that Teana's made a couple of times about, not seeing any use case that a retail CBDC could meet that a privately issued stablecoin couldn't. And if we
in Western markets, maybe in emerging markets, there's probably
yes.
a greater
I would
use
say
case.
even in non-emerging markets, for example. So if you look at the financial inclusion aspects, for example, that's often touted about being a potential positive benefit of CBDCs. If we look at the financially excluded today, those who don't have bank accounts in developed countries, so in the UK or the US or in Europe, who is excluding them from the system? It's not the government or the central bank, it's private commercial entities, banks.
But it is the government through regulation.
Well,
and what is expected under the Bank Secrecy Act in terms of KYC, AML, and what the OCC puts on the banks, at least in the United States, is what excludes them.
I don't disagree with you entirely there. I would say, though, that there's room for more of a conversation in most jurisdictions about how we KYC people, and given
agree.
technological advances and things like that, what we can use, and also,
I think Jannah is trying to bring also European perspective.
Anyway, what the point that I want to get back to, though, is I think that, again, from a monetary policy perspective, there's a good case for continuing to give the public access to money and to digital money as the type of money evolves going forward, and that a retail CBDC should be designed, at least for certain levels of transactions, in such a way that it is basically a digital form of cash. So it has elements of anonymity and things like that at a certain level. And if we look at certain CBDCs, like even the Chinese one, or the experiments that the Swedish Riksbank has been undertaking with the e-krona, they all actually have that built in for low-level transactions.
Yes, but I think we still have a lot of concerns about the design of CBDCs and how they can fit and how can they be operable under DLT technology. So I think that's a perfect segue into our next question, because there's so many design issues. So how do you think that we can, not we from a regulatory perspective, but to make, CBDCs part of the Web3 as we usually say they are?
Just to go to Jannah's point, though, there is a lot of technological development happening on the digital identity front, and not just through ZK rollups or through these types of decentralized KYC protocols that are coming out, but there are people who are really pushing the boundaries of technology in terms of multi-party computation, something new called nil multi-party computation, where, exactly to your point, there will be different levels of identity verification depending on what you want to do. And so that is one of the things that we're talking to the central banks about in terms of continuing to protect user identity and ensure that it can function like cash from an anonymity level, depending on what you want to do. So I think that's sort of the most important design feature.
Agree. Jannah?
I've lost track of what the question was.
I think this is for Teana, because you suggested this great topic, Teana.
Design.
Come on,
yes.
you're on it.
So it just gets back to what I was saying earlier about, for me, what's interesting about what we're doing today is that evolution to, a decentralized Web3. And yes, that's a journey, but within that, we do have a number of problems to solve. And I think identity is probably one of the key critical issues that we have. And we talk a lot about our technology will allow us to, prevent more money laundering than we've been able to under the Bank Secrecy Act. We'll be able to, do this better than we've done it. But we haven't actually flushed out, I think, enough of those possibilities to be able to feel confident that we could say to regulators, we can replace what we have. I hope that we get there. I think that we are headed in that direction. But being able to have that privacy feature where, you could, in essence, tokenize yourself and give information, verifiable information to someone with your health passport, and someone else when you're applying for a mortgage, and someone else when you're effecting a payment, and being able to kind of separate what information is provided to whom and how it's, held or stored. I think it's pretty critical when we're looking at kind of a Web3 environment. I think from the payments perspective or the transacting perspective, it feels incongruent to have a system of money that can't in some way interoperate with that. So, it's not that I'm opposed to having consumers have access to central bank money. That's not what I'm saying. It's just more in that until we solve these privacy issues, I'm not quite sure how we could provide that same level of pseudonymity. I'm not necessarily saying anonymity that we have today, and bring in those people that are being excluded or underserved by the system, and we have tools that can do that today. So I do, going back to what we said at the beginning, I think that there are different tools for different use cases, and I think just nailing down those use cases and then solving the impediments or the inhibitors that are preventing those tools being applied to those use cases, whether it's technological or regulatory or confidence and adoption. But at the moment, we're trying to do a whole bunch of different things and conflating some of the use cases. And I think CBDs and stablecoins are a really good example of conflating two things that kind of seem like they might serve the same purpose, but today don't.
I can't see the time. I don't know how much time we have left here, but I have one more question for our amazing panel here. We do have a March 29th hearing, I hear, about CBDCs. Do we have any sort of expectations?
I mean, we've had a bunch of hearings on CBDCs and stablecoins generally. I don't know if anything is going to be different. It's probably just more part of the process of trying to learn. I will give the regulators and policymakers a lot of credit because they're going through an educational system and probably on an expedited basis since they know now they've accepted that crypto's not going anywhere and it's here to stay. So it's probably just more of that. I don't think we'll have some sort of illuminating answer after this hearing.
Absolutely. And the vibe, I mean, I'm sure for some of you who have listened to the recent hearings, I personally think that we have made not only great progression, but you could hear from these legislators asking sort of more deep questions. And to me, that means that not only they're trying to understand our industry better, but at the same time, they're trying to understand the technology behind it better. Teana, I'm going to go back to you because you are with Digital Chambers of Commerce. Do you have any thoughts about this upcoming hearing on March 29th? Or what can we expect from that?
Yeah, I agree with Rebecca. I think that we're still at that exploratory stage, and I think we're going to see not a lot of new information until all of the reports that are required in the executive order come out. So Rebecca, tell me if I get this wrong, I'm pretty sure that Treasury is tasked with writing the report on the future of money. which will cover, new forms of money, new ways to transfer money, and address really specific questions around the consequences and possible design choices of CBDCs. And I believe that report is scheduled for either 90 or 120 days. I don't have the schedule in front of me. So until that happens, I think that the hearings that happen between now and then will be more an opportunity for, Congress to kind of dig in and ask questions. But I don't think we're going to see anything major from Treasury come out until that happens. The Fed also has a consultation open at the moment too, which I believe the deadline is, end of this month. So a couple months from then, we'll probably have a report out from that consultation.
And Jannah, from a UK perspective, what are we looking forward regarding CBDCs or?
Sadly, from a UK perspective, I don't think that we're going to see a lot of movement on the CBDC front this year. On the other hand, I do think that we'll potentially see some more discussion on the regulation of stablecoins. Both the UK and the EU recognize the existence of systemically important stablecoins and are looking to regulate them so that they can start to eliminate some of that counterparty risk. And we're more likely to see some evolution on the private front than on the public front, I think.
Perfect. I think we have 4 more minutes. Any questions for our panel? Yes.
What do you think of the chance of central banks revisiting Bretton Woods kind of bank core collateral coin instead of using CBDCs, or is it more likely they'll send CBDCs and it'll automatically swap to the other nation's CBDC?
I mean,
I didn't say I was the expert.
Look, there's been talk about revisiting Bretton Woods, but I think they need to figure out if they can even, to the point is, China's so far ahead, the US is an exploratory stage, the Bank of England is very reticent, other banks in the EU are thinking about it and may be more progressive from a thought standpoint, but I don't think they're going to revisit Bretton Woods until there's sort of a more cohesive view, about whether CBDCs are even going to come to the fore and how they're going to do that.
I'm not going to comment on this.
One more question.
Hi, I just want to ask, what is your opinion about Project Hamilton that launched a few months ago between Federal Reserve Bank of Boston and MIT? Do you think an open source central bank currency is going to be a little bit better than what China has right now?
What do you think about
so I thought it was really cool. The Fed system in the United States is really interesting because there are 13 different Feds and they all do different things. And I thought that they had this really interesting idea, but when you talk to people behind the scenes, I don't think there's as much appetite to have an open source permissionless CBDC but I think that they're all continuing to try to innovate and develop. And I'll drop a little alpha here, but the other thing that I think is really important to think about and know just from a regulatory perspective, at least in the United States, is while there's a ban on anyone in the government using crypto or owning it, having wallets, anything like that, they are trying to figure out how to create private systems in which they can operate without being seen and without it being transparent on the blockchain. So almost like a test net, what we would call. So when they were asking me about it, they're like, is there this thing where we can play around, but it's not real? And I was like, yes, it's called testnet. But I think that's a really encouraging point, but I don't know if there's going to be an open source CBDC, but it'd be cool.
I agree with Rebecca 100%, and the appetite is there, but I do not think we're there yet. Hopefully we're going to have more discussion. There's so many, even policy advisors and many policy Chamber of Commerce, I don't know, I think they're working on this as well. So, but I don't think we're really there yet. I think one more question. My husband here, I'm 1 second. Yeah.
So, first time I'm hearing about this topic. So, do you think that the move by China is more geopolitical than of economic value, right? So the first country that comes to mind that it has adopted the US dollar as a national currency is Zimbabwe, right? So let's say there is another country that is having trouble with inflation, etc. Adopting what China has done, the currency, it's going to be the easiest thing ever. I mean, an app on your phone and feeding the system, and do you think it's more geopolitical than it's economical?
100%. I mean, you can see it even just in the traditional banking system, right? What I was talking about earlier, as the U.S. deprecates out of certain developing countries, China just comes in and starts supporting banks, and so that will be the next step to it. Okay, Rob, I'm giving you the.
Can I just make one quick comment as well? But totally, we will take your question. I just want to say that you know, on the flip side, Cambodia is an example of a jurisdiction that has used the introduction of albeit synthetic CBDC, Bakong, as a means of de-dollarizing their economy. So they wanted to basically get people to stop using dollars and start using the domestic currency, and that's why they introduced it, and it is quite an effective measure so far.
Okay, final question, very quick, because we only have 2 minutes. It's okay, come on, only 1 minute. Go ahead.
Potentially, yes.
Go.
Okay. Yeah. So, for example, I was speaking to a think tank last year, which involved a bunch of like MPs and members of the House of Lords and policymakers, and they were very interested in the potential for CBDC as a means of implementing government policy. So things like helicopter money and distributions like that, but also the potential to tax. Yeah. So.